Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. How are you today, and how has the week gone for you so far?
Hi, Mel. Yes, it's a nice day today, and the week is busy. It should be, of course, but yeah, now we are busy with different stuff. We actually have the yearly external auditing as well, so that is on top of the rest. But it's of course good we are doing that as well. So yes, busy in a couple of dimensions, but the focus is no doubt on the market and investment opportunities. What about you, Mel?
Oh, it's been an exciting time here in Manila. So we just went through a midterm elections. So pretty exciting times. And we'll see where it goes from here as far as governance is concerned, Peter.
Yeah.
We have a lot for our episode today. So various things going on in the world right now. We're going to talk about the brewing India-Pakistan conflict. So that adds to the decades of conflict between the two countries and how it's affecting or potentially affecting both economies. And then we head over to a Chinese EV battery maker with
Mhm.
plans to go public in Hong Kong very soon.
Yeah.
And then, of course, from last week's discussion, we saw a very surprising outcome from the negotiations between US and China regarding tariffs. And then in Germany, the parliament has opened under a new chancellor, despite or after months of political uncertainty. So, and of course, as usual, we'll talk about our global outlook as we always do. Okay, so Peter, I'll get the conversation started on the renewed conflict between India and Pakistan. They have a long history of conflict tracing
Mm.
back to the 1940s. And now this latest episode was triggered by a terror attack, or what they call a terror attack, that targeted tourists and civilians in Kashmir. And then India shot back with missiles to Pakistan. And it seems that the situation has not improved so far, and there are drone and missile exchanges since or over the past 2 weeks. Apart from being a dampener to the local security conditions, it's also seen to, of course, dampen domestic consumer sentiment and, if prolonged, growth. Already they're seeing or they're warning that apart from of course, the uncertainty, the geopolitical uncertainty, there's also this potential to cause disruptions in the global food supply chain. India is the biggest rice exporter, and of course, its major markets nearby in Asia could be affected.
Mm.
Stocks are also not really that big fluctuations yet, although there have been a dip in the past few days, but the
Yeah.
long-term trend appears to be up, Peter.
Interesting. Let's start with the food supply chain risk, so to say. How big a risk is it? Would it be measurable in Southeast Asia households?
So far, the biggest markets that India is serving is Malaysia, Indonesia, and Singapore. The pressure is not reflected in prices yet, although if the conflict goes on longer, or of
Mhm.
course, India will be forced to shift resources away from areas like agriculture towards defense spending, and that could be the main channel by which other neighboring countries could feel the pain as far as inflation is concerned.
Um, yeah. How to say it? Should we sort of try to convert it into inflation risk? Is it something that we are nervous about? So is it do we just sort of we have it on our radar screen, or are we sort of more than that? As a real nervous, say, okay, could actually pressure inflation higher. Let's say in Southeast Asia, is it a risk sort of?
Right now, it's something we keep a close eye on. It's not yet affecting prices, and since
Okay.
harvests are a few maybe weeks
Mm.
further, it's unlikely to be reflected there. But if it is extended to maybe the next planting cycle, maybe that could be the concern or the bigger concern down the road, Peter.
Interesting. So we have it on the radar screen, and sort of the India has explored enormous investor inflow as investment inflows from as basically the stock market had inflows from both a lot of domestic
Mhm.
investors, but also a lot of foreign investors.
Right.
And you say you're not nervous sort of there as well.
So
So
far, no. Although there
um,
has been a big foreign outflows since late last year, because some
mm,
investors were nervous that India was quote unquote slowing down. But of course, their growth is still much, much faster than Europe or Americas are concerned. So any pull out of investments from foreign investors could be temporary, just a knee-jerk reaction to the conflict. Although,
mm.
as I mentioned, if it does become prolonged, this trend could be more permanent, and maybe they could go to China, especially since the conflict so far, in terms of tariffs, is concerned, has been resolved.
So basically, we say that the long-term prospects are stronger than the
Yes,
short-term risks. Yeah.
for India, yes.
Yeah, that's interesting. Big destination.
Mhm.
Good, exciting. We stay optimistic. Also
Yes.
there.
How about Peter? There is this discussion about this Chinese company going public in Hong Kong, and it's said to be the biggest one so far this 2025.
Yeah, that is the EY battery producer called CATL. Yeah, so
Mhm.
it's the worldwide biggest producer of batteries. It's fantastic. As it's always interesting when we see sort of the biggest, and as you mentioned, it is globally the biggest fund as a capital or equity raise so far this year on stock exchanges. Minimum $4 billion, and that is it is a substantial amount, yeah, of course.
Yes.
But if we look into to the trades, there are a couple of interesting perspectives. So first of all, we talked about you and I in the start of the year that this could be sort of a turning point in terms of IPOs globally, particularly when we were looking into maybe Hong Kong actually,
Mhm.
and there were sort of fairly good expectations to US as well. That was a bit before Trump sort of whoring around, yeah, and doing a lot of damage, but still, this is it is actually sort of underlining that the IPO activity is increasing. It is, of
Mhm.
course, a as a single enormous deal, yeah. But there've been a fight among corner investors, as what you call anchor investors, corner investors, to secure the listing beforehand to get on the board to become a corner investor. There have been so many who wanted to take these positions, and that is interesting. You could, of course, say that the company is leading within its field, and it is always interesting to invest and to back some companies that are in the lead as they are. But
Mhm.
on the way, the number I heard this morning was it was maybe 115 times oversubscribed.
Wow.
Yeah,
Very
so we are there have been some subscription seekers have been enormous big. But
Mhm.
of course, it's we are sort of a bit in the game that people are just, of course, trying to get the stock share, so they can oversubscribe as they want. They will never get them. So if it's 10 times or 100 times oversubscribed, it's just shows still about something of the interest, and that is interesting for us as investors. The price earning is probably around 18.7%. 18.7. It's in the aggressive
Yes.
range of the market. Yeah, there are a lot of issues and details worth to look into when we talk about this trade. Another thing is the filing, so the application for the IPO to the Hong Kong Stock Exchange and FSA actually is what they call an S filing, and that means it is not foreseen that, in particular, U.S. investors in any big share of the IPO will be sort of dominating parts of new investors. So it is foreseen that U.S. investors actually will play a very minor role in this IPO.
Mhm.
Otherwise, they will be used another filing documentation. And it is indicating another thing that the big fundraising IPOs from Chinese companies, they are now moving a bit away from US probably, and they're actually targeting more the regional area, Asia,
Okay.
and of course Europe, and eventually it will target even much more the domestic market in China.
Mhm.
So this is a bit about where the Chinese companies are, the big Chinese companies in the future probably will get the money from. It should be mentioned that there is currently a flow of mid-sized Chinese companies coming into the US market. But Chinese domestic capital market is playing a bigger role, and
Mhm.
US is a smaller role. Then we have a technical sort of complexity as well. It's easier for Chinese companies to raise the money outside mainland China, like in Hong Kong. Hong Kong still has a particular status when it comes to capital control. So for the big investments that also CATL is having outside China, like in Hungary, uh, it is easier to utilize the capital that they raise in Hong Kong that get instead of getting the capital out of China.
Oh.
So yeah, Hong Kong is probably getting a bit sort of an upswing again.
Mhm.
That is so. There's a lot of interesting science in this trade actually, if we want to study it a bit and see what are the different backgrounds of what is going on. So an interesting trade in many ways.
Mhm.
Also in terms of size and pricing, and it is the price, of course, as the price earning indicates that the price on the stock is also in the high end of the expected range, and it should start trading on the 20th of May, so next week.
And also
Uh,
about timing also, Peter. I mean, maybe a lot would have been surprised that they would pursue a listing right in the middle of the global tariff war. But here they are, oversubscribed, high price, very
yeah,
strong demand as well.
yeah. So yeah, very interesting actually. That one worth to keep an eye on. Good. Yeah, that was a bit sort of from from the trading floor. Yeah.
Yeah. Speaking of wins of Chinese companies and of course of China, let's talk about the very surprising outcome of the negotiations between US and Chinese officials held in Switzerland over the weekend. We weren't that
Mhm.
optimistic that something major would have come out of it, but we're happy to be proven otherwise because it's a very strong outcome that the 145% tariff has been temporarily brought down to 30, and the US tariff of 125 imposed by China is now down to 10% as they go forward with more detailed negotiations. I think it's the best outcome that could have come out of that. And everyone's just pleasantly surprised. Stock markets have rallied so far. US stocks have actually erased the losses that they posted in the past 4 months because of this. So
Yeah.
it's interesting, but of course, there's always this discussion that the US is claiming that they won the negotiations. China
Mhm.
says that they won the negotiations. So, um, do we really consider a winner here, Peter?
Yeah, a good question. Um, as I would say, it's good for a range of Chinese and U.S. companies that after all the tariffs are down to I don't know what to call it. If you can call it a manageable level, I don't know.
Level, yeah.
But at least it is not as crazy as it was. Does it show something? Yeah, it does. There's a lot of things we can read out of it. First of all, I see Trump is trying to regain some ground. Yeah, he's on a retreat. But that is one thing. We should remember that even if the towers comes back to where they were, as the world has not gained anything. On the contrary, it's
Of
still
course.
lost.
Mm-hmm.
But anyway, as you say, it was actually sort of better than we had expected and believed that it could be as positive as it is. This is not an outcome, and you mentioned half of it. Exactly that the U.S. stocks going up on that weekend's result, yeah. But why? Why was sort of the reaction in the Chinese stock market that was negative, slightly negative, and why is that? And that is interesting. Interesting. Here we need a bit of talk from the trading floors or whatever we can call it again. Um, Obviously, that U.S. stock market is reacting positive. Yes, because the Trump policy and tariff sort of aggressions has so far been sort of a value destruction, as we call it here. So getting a bit back towards normality is less value destructing, and that is actually equal to higher stock prices. Yeah. So that equation and understanding is obvious. But the other part saying, okay, so why is it that the Chinese stocks didn't go up on that one as well? It should be people say, okay, it should rise. No, the key is that if the tariffs come a bit back to normality, then the fear in the Chinese stock markets or among investors in Chinese stocks is that the Chinese government is not forced to push growth in domestic China as much as we thought last week. Actually, this is so interesting because what people are looking at now and have been looking at for some time is they want the Chinese story. International investors are not investing into Chinese stocks because some Chinese companies export into US. It is simply not. This outsourcing story is not interesting at all. Interesting is the Chinese story, the Chinese domestic story. This is what people they want. China is growing so big and important now that people they want to see that the growth is domestic driven, and this is interesting for investing into the Chinese stock markets or Chinese companies.
Mm-hmm.
So that is quite interesting to see. This is what the investors are searching. We can feel it. Our China fund has got a bit fame here the last couple of weeks after our very fine award, and of course there have been and some activity around it, and much more sort of bigger, longer conversations, yeah, about China stock markets, and we're seeing a lot of interest from different angles and investor types. But it is obvious that it is what is going on in domestic China that people are searching for.
Mm-hmm.
People are not searching for the Chinese export story, as so to say. This is not so fantastic. So that is interesting, and that is why we saw the difference in the reaction in the stock markets. Very interesting. And so we can also, I really feel confirmed that if we should trust in a rising Chinese stock market, then it is very essential that the domestic growth story is intact, and that Chinese political leadership do not focus away from it.
Mm-hmm.
That is one clear takeaway. And so far, we actually argue that it is understood in among the political leadership in in China has actually understood they need to do more for domestic growth, and they need to rely more on what we would describe as a private sector. And that is also where you find a lot of very good investment opportunities. So yeah, that was sort of a takeaway on the market reaction, sort of bit from the trading floor as well. Yeah, on that interesting weekend.
Actually, Peter, I just like to also point out that the day after the Geneva discussions, President Xi Jinping came out to host presidents of Latin American economies in Beijing. So
Yeah,
that's also
yeah,
another very strong statement to the world that, hey, we found quickly found new or bigger external partners to send their exports to, like
yeah,
regardless of maybe when if no negotiations come out of it or no lower tariffs come out of the weekend discussions, they have Latin America to look to. It's really becoming also
mhm,
a theme of how the Chinese government is responding. Although yes, the focus towards domestic growth is really obvious, especially compared to previous years. They've been more generous with subsidies. They've been more willing to talk to the privately owned companies. So it's really the story as far as China is concerned this year,
yeah.
Peter.
It is, and it is interesting. Now, the sort of the discussion about what is called the global south
Mm-hmm.
that goes a bit up, sort of on and off, is very sort of in the media now and then it sort of loses attention. But this is actually also what we've been observing and talked about in our company. That's the Trump war against the rest of the world with tariffs and everything else is opening the move, as the move of global south. How global south find each other, find together,
Mm-hmm.
is going simply much faster. And the example you bring with China all of a sudden standing there together with all the important Latin American political leaders is just underlining that the global South movement is actually there and is stronger, and it can move very fast. Actually, it's US is losing out. Yeah. So
Mm-hmm.
there's a lot of key takeaways. There's a lot of things there to I think to take away from the happenings, and they're quite interesting actually. Yeah. Nonetheless, there was a lot of China. We do have a bit on Europe as well, of course.
Yes. You were saying,
Um,
Peter, that Germany is finally settling with its new chancellor. How has it been so far?
yeah, yeah. He has played his entry very unusual because he started to get the big spending packages approved for infrastructure and for defense. Yeah, basically approved before the old parliament
Mhm.
left their seats actually, and they were just running as an outgoing parliament is running the business and would normally not take any new major decisions. So the entry has been very awkward, so to say. Yesterday, Wednesday was then the official opening of the new as a new session in the parliament after the election. And also, which of course means that the new Chancellor Merz gave his speech to basically to the Parliament, yeah, and of course to there also to the nation, so to say, about how he wants to run the policy. They have the government coalition. They have made this very famous 144 pages large uh, coalition paper, and that is sort of the agreement that describes a lot of things that they want to how to regulate a lot of things. If we look into it, uh, I would say as a, here we need to mention again here at Landgreen's capital, we are Berries in Germany. We have been so for minimum 10 years, and so far we've been right. A coalition paper and work paper on 144 pages. It could feel like say, okay, now they are really doing it. The people, yeah,
Mm-hmm.
they have described how to reinvent Germany. No, this is actually not the what the base is in this coalition paper. It's much more regulating the cooperation between the two major coalition partners, the conservative CDU, and then they have the Bavarian sister party CSU, and then the Social Democrats SPD. This is much more a sort of a regulation about how they live together, and it shows they are simply not. It is obvious also if you look at how people they react in the different camps. They don't respect each other. They don't like each other, and this marriage is ooh, that is not really based on anything than neat, yeah. And there had been some expectations. Yes,
Mm-hmm.
so it was. I was excited and say, okay, now it comes, because people had expected that Friedrich Merz, he would talk about the labor market in Germany, and not just the labor market, but actually how employees, they should deliver more. So
Mhm.
he was expected to talk about going back to a 40 hours working week, and also talking about the efficiency among German workers. And that is obvious, and that is a big problem for Germany. That's over the past 5 years. The efficiency per hour, so to say, and that is across the board. It's not just an industrial worker, it's across the board. Everybody in Germany has dropped. People are simply not as efficient as they were, and they are working. They're not working the 40 hours. And we have claimed here for a long time that is the best fix for the German economy is that the economy is to grow bigger. Yeah. So there is not enough money to repair the infrastructure. And that is because they simply do not produce enough. The GDP in absolute numbers is simply too low. To get that increased, each and everybody simply need to work more hours per week. That is the simple reply. And other European countries, smaller European countries, are going that way. Now, there was some speculation that he would have talked about that yesterday. He didn't. He did mention the sort of the 40 hours should be sort of a
Yeah.
frame and whatever, yeah, but nothing at all. And then he
Mhm.
just talked about all kind of issues in an extremely boring way. No big visions. I've seen several interviews with Merz where the journalists and actually ask him, okay, so what should we expect now from GDP growth? Because we should remember this year is the third year where the underlying GDP growth is zero. They might, due to the big also the big
Mhm.
sort of packages, debt packages they have approved that can lift the growth. Yeah, but underlying is the same as the past 2 years. 0%. So some journalists have actually quizzed him and said, okay, so where are we going? Where are we heading? What kind of GDP growth could people expect? And he has pointed out that this very strong rebound that could result then in maybe a 2% GDP growth in 3 years' time. It is as defensive as it can be, yeah. And it is hopeless. So seen from this as the continued macroeconomic difficult situation that
Mhm.
Germany is exploring, uh, so basically it won't change. So we had a small hope saying, okay, now something happens and we would put Germany back sort of a bit
On
on
track.
the list and say, okay, hey, let's give it a try. Yeah. But we are sorry to say, it is the new government is just as unambitious as it possibly is, and that the macro part of an investment decision is not supporting to take Germany back on the list. Yeah, and we are talking about the biggest economy in Europe and
Mhm.
one of the biggest economies in the world. And
Yes.
this is actually this is that was a disappointment. So we remain unchanged and see what should be positive surprised. We are happy. Yeah. So that was sort of my take from also yesterday's speech to the Bundestag and the Parliament. Anyway, Mel, let's have some sunshine for the global outlook at least.
Yeah, because that was quite bleak for Europe. Um, I can speak about Asia if you want to
Mhm.
see to talk about sunshine. With the resolution, or at least temporary resolution, to the US China tariff war, the outlook is looking even better. We've always said that clouds have been hounding the horizon, the view, but with this development, it is more encouraging, particularly, and we've seen that the response towards Asia is strong. We discussed the CATL IPO earlier, and that is a very strong manifestation of the long-term growth potential in the region, and how foreign investors are taking notice, or if they haven't already. So that really is the story here in Asia. It's really some disruptions temporarily, but long-term growth is still upbeat.
Yeah, yeah. At least on the global outlook, as we continue to see overweighted sunshine, we actually see the world as stronger than many. We like the overweight to in your direction, Asia, emerging markets, also in fixed income. It
Mhm.
remains the same. Are the clouds on the horizon? Yes, they are. Are the clouds getting bigger? No, maybe a small retreat actually, but we simply just see the strengths in the world, and we have taken our reduction in U.S. allocation, and we should mention that the increased allocation in our sort of global asset allocation into alternatives is actually predominantly with a European focus.
Mhm.
So it's also to say something is going on in Europe. Actually, a lot of interesting companies, but not necessarily listed. Yeah.
Mhm.
And there happens a lot on the non-listed arena. So yeah, there are a lot of opportunities. We see the world as strong, as you say, the sunshine, and that is actually how we continue to look also into the next week.
Yes, thank you, Peter. That's all we have for this episode, and then we'll catch our listeners next time. Thank you for tuning in. We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinscapital.com.